Hello everybody, my name is Joey. I'm part of the Chart Guys team. I've been a full-time trader and analyst for 7 years. I'm here to talk about the broad market. We knew we were looking for weekly higher lows, and after the CPI reaction today, the odds of those weekly higher lows shaping up have increased dramatically. And we'll go ahead and take a look in the charts, look and see if the yen carry trade is going to break the markets or if it was simply weekly consolidation. So getting into the charts here, looking at the S&P 500 futures on the weekly time frame, anything over 51.20 was going to be a weekly higher low, and bulls now sticking a foot in the ground while holding the 0.5 retrace of this move up, which keeps higher highs favorable for bulls. If you hold the 0.5 retrace, odds favor higher highs. If you dip below the 0.5 retrace, a lower high is the most likely scenario. So now what do bulls need to do to actually get this weekly higher low set? So personally, I do not designate pivots on outside bars. So despite a clear daily lower high being set here this morning on the secondary CPI reaction, I'm just going to consider this one move up. I'll say that anything below 56.69 is going to be a daily lower high. And if bulls want to shape up that weekly higher low, they're going to need a clear daily higher low and higher high from here. We have tons of room for higher lows on all smaller time frames. We'll start out and zoom in. Tons of room for a 4-hour higher low compared to the low of today. Our hourly support is that same low of today, just a stair step up and 5-minute 12 EMA rider all day, just full on bull control. So once 5-minute 12 EMA is lost, which will probably be in the after hours and evening session on this futures chart, we'll look out to 15-minute 12 EMA. That's going to need to be lost to see hourly consolidation. Then we'll look to hourly 12 EMA. And ultimately, bulls still are going to need to regain a 4-hour uptrend if we want to have confidence in this daily bounce. So we know a lot of times on these data reactions, we'll kind of get the old rope-a-dope, pretty much a version of what we had intraday here, where initial CPI reaction is bearish, V-shaped to new highs, then big old bear move, and then the real big old bull move. So we'll have to stay on our toes as always, because these reactions time and time again show us that they're a bit feeble. So moving on to the tech sector here. So similarly, looking for a weekly higher low, though consolidation was not as healthy as the S&P 500 as we pulled back beyond the 0.5 retrace. So we do need to be cognizant of the potential of a weekly lower high compared to 2025 if bulls do in fact get that weekly higher low set. And it's going to be pretty similar structure to ES. So just one daily bounce up. You could say we broke daily lower high resistance here. You could say that anything below 19,683 is a daily lower high. I'm not too concerned with those levels, to be honest. I'm going to be concerned with two things. One, can bulls reconfirm a 4-hour uptrend from here? And if they can, then that 4-hour uptrend is going to be the guide, because, I'm talking about a daily lower high on ES, potential for daily consolidation on NQ before we get back to these highs. But we also need to remember the character of the broad market, and we see V-shapes all the time. So that's why it's helpful to lean on your intermediate timeframes here. So very similar to ES during the day, 5-minute 12 EMA rider all day. Going to need to lose that to look to the 15-minute. Going to need to lose that to look to the hourly. Just going to be the zoom out game from here. We'll take note on how do backburners respond. Do bulls absolutely snap up the next 5-minute oversold conditions? If they do, then that gives us a little more confidence in the sustainability of this move. And then, of course, next time we get hourly oversold conditions, that will be very telling as to are bulls eager to snap up a daily higher low, because typically hourly oversold would align with your daily higher low. So we'll just take it one step at a time. NQ was our lead bull here today, along with SMH, 5.16% on SMH. We'll just go there right now. So daily bounce underway. We know it was weaker on consolidation, but big old daily bounce. Lots of room for a higher low compared to 213.57. And the hourly uptrend is going to be the guide for this daily move. Anything over low of today, going to be an hourly higher low. And then 5-minute, 15-minute hourly zoom out game, going to be the same as we talked about on ESN and NQ. And a big portion of this upside here is NVDA. So was definitely struggling down at the lows. We knew a weekly higher low was the most likely scenario. That is officially set with the break of the high of last week, 116.21. But if we're going to have confidence in the follow through on that, bull's going to need a daily uptrend eventually here. So anything below the highs at 131.26 is going to be a daily lower high, and just watching our hourly uptrend as the guide for the daily move. So let's go back and look at the Russell futures. So the Russell has been one of our weaker major sectors off of the recent tops. Not seeing any of the little daily bounces that Pierre saw along the way, but now we technically have our daily bounce underway. We've gotten over 4-hour 12 EMA resistance, which is acting as resistance for over a week. And now the next question will be, can bulls regain a 4-hour uptrend to see daily bounce follow through? And as we're looking for a weekly higher low here, bull's going to need to bounce big enough on the daily to regain a daily uptrend to get a weekly higher low set. And then due to the depth of the pullback on the weekly, we would anticipate a weekly lower high compared to 22.49. So this is just a beautiful weekly equilibrium, and traders are hoping that this can continue to tighten up, perhaps into the election. It would get boring into the election, but it's not unprecedented to see a tightening range into the election. If we go to ES, we can look back to 2020, and this was our action leading into the election. And then we broke bull and continued on for a long time. So potential for something similar on ES, RTY, NQ, all of that. Wouldn't be shocking at all, but for now, bulls have full intermediate control. So what else we got? XLF is the carry trade. It's creating fear in the financial sector. If you look at JPM, this day here, from top to bottom, 8.25%, that's definitely some fear. That's definitely some big volume. But if you look at, say, the 2-week chart on JPM, is anything abnormal here? Not at the moment. Not at the moment. If we look at the XLF weekly chart, is anything abnormal here? Not at the moment. Bulls are springing right off of weekly 12 EMA. So he's certainly going to keep an eye on these fundamental things. But it's important to stick to the charts and not let our emotions get the best of us when things are feeling spooky, because the bottom line is pretty much any consolidation in the broad market is spooky because it's typically just going up. So at this point on XLF, we have still just a daily stair step off of the highs. You could kind of look at this as a little pivot, perhaps on the 12-hour, move down, lower high, move down. But the bottom line is that bears have been unable to close below this daily support of 44.19 on either of these days. So bulls are hopeful that they're going to shape up a daily bounce here tomorrow. If they're going to do that, they need to regain an hourly uptrend. They have a lot of room for an hourly higher low compared to low of today, 43.38. And we'll see if they can hold that and then go back up and break the high of today tomorrow. If they can, then we'll scout a daily lower high. And if a weekly higher low is to shape on up, then bulls are going to need to regain a daily uptrend here eventually. So XLV, similar story, weekly consolidation underway. As long as we're holding the weekly uptrend, bulls maintain full control of the monthly stair step into blue skies. And we've got a daily bear flag confirmed without follow through. That's often the first sign of a pivot on a larger time frame, which in this case would be a weekly higher low shaping up. So bulls, if they break the high of Tuesday, 155.85, that would be a step towards getting that weekly higher low shaped on up, but like everybody else, going to need a daily uptrend eventually. And the importance of uptrends in situations like this are because it's not too difficult to see a strong counter trend move. You catch the opposing team off sides and you just run over them all day. But once you pass the ball back to them and then overpower them a second time and take it back to new highs, that's your higher low and higher high. And that's what's needed to show a sustained passing of the torch. So these are excellent moves, and we just know that there's more that bulls need to prove. So looking at the VIX losing daily EMAs here, we know we're looking for a weekly lower high. The fact that we've lost daily EMAs increases the odds that that is shaping on up. And we've got, we'll just watch high of today as key resistance tomorrow. As long as prices below that, then VIX bears maintain full control. Gold just riding weekly 12 EMA through blue skies. And as long as that's the case, bulls maintain full control of their monthly stair step, and we'll have tons of room for a monthly higher low next consolidation. In the shorter term, we've just got a daily EQ, high, low, lower high, higher low. Bears trying to shape up a lower high here today. You want to make sure you're not trading too aggressively in a tightening range, because we know that action can get choppy within there. So if this breaks bull, that's a weekly bull flag confirming to blue skies. If it breaks bear, we have to stay frosty for the potential of a bear break without follow through, because that weekly 12 EMA would be just below there, and I guess that would be decent follow through. But for me, weekly 12 EMA is the top guide. Not a lot going on here in gold. Gold bulls are pleased to be holding on as well as they are up at the highs here, because silver, platinum, copper definitely saw some deep weekly consolidation. Metals miners saw some deep weekly consolidation, and now it's looking like those names are trying to bottom out, and gold is potentially just skipping out on any notable weekly consolidation. I mean, we got it underway, but just marginally. So silver, we're looking for that weekly higher low. We know bigger picture, we're looking for a monthly higher low. Bouncing from monthly 12 EMA, got to regain a daily uptrend. If a weekly higher low is to shape up, lower high resistance is 29.55. If bears defend that, be watching out for a little bit of an inverse head and shoulders to try to get that weekly higher low set. And ultimately, we can kind of just treat this as a range similar to gold, where we want to make sure we're not getting too crazy within it. Bears playing short off the highs, bulls playing long off the lows, but looking for this weekly higher low, looking for the weekly trend change to get that monthly higher low set. So looking at oil, so oil has broken bear out of its multi-year monthly EQ, and now we're nearing our final support down at 63.64, but we're quite extended. We're nearing daily oversold conditions. If we break that support, we would be weekly oversold. So what bulls are hoping for as far as like an easy setup is to have this daily stair step continue down, break support into extreme oversold conditions, and then don't see follow through and V-shape it. What bears want to see is they want to see support hold, cool off RSIs with a little bounce, and then go back down and break it through with confidence. So right now, 6 hour 12 EMA remains resistance. Got to get up and over that to get anything going here. And if we do get up and over that, that'd be a daily bounce getting underway. And I would just call anything under the highs up here at 76.91 a daily lower high. We do technically have high of yesterday as a little dinker daily lower high at 69.08, but given that the status quo of the 6 hour 12 EMA was intact through all of that, I'm not really, I mean, it's certainly a resistance level we'll be watching, but I'm not counting it as a daily lower high personally. And if we're talking about, okay, bear break of this monthly EQ without follow through, step one would be a daily uptrend. So many steps ahead, and we know that commodities can trend further than people anticipate in both directions. So what else we got? MSOS, it wasn't mentioned in the debate last night, and we were talking pretty in depth in the room here, in the chart guys room, about how weekly lower high is the most likely scenario, and just listen to the charts and don't get too tied up in the thises and the that's. And whether the debate had anything to do with it or what, I don't know. I don't really care, because time and time again we see names bounce and reject from their EMAs on the time frame you're watching, and that's what we're getting here on MSOS. So at this point, it is just daily consolidation. Anything over 637 would be a daily higher low, and if that weekly lower high is going to shape up, we need to see a deeper pullback big enough for bears to create room for a lower high and then try for the daily downtrend. So 724 is key resistance overhead, and it just is what it is on MSOS at this point. So we'll look and see, do bears go for gap fill, or do bulls keep consolidation healthy and keep the show on the road? All right, and last but not least, Bitcoin. So Bitcoin, similarly, looking for a weekly higher low. Bears have room for a weekly lower high. Bulls got to regain a daily uptrend if a weekly higher low is to shape on up. I'm going to leave it there. My voice is going out. Thanks for tuning in. Hope everybody had a good day out there, and we will see you next time.